Today's webinar is framed as a tax season update. See if I can move ahead the slide. It's framed as a tax season update, but we're going to talk about a wide variety of topics from the coronavirus relief bills to the federal and state filing deadlines to the B-10 form. These are difficult and trying times we find ourselves in, and on behalf of the Wolf Group, we're here to help. If you have any questions or concerns that you think we may be able to help you address, please do not be bashful. We enjoy hearing from our clients and helping where we can. I know many of you have already sent in a lot of questions in anticipation of this webinar, and I will try to answer them throughout the presentation. So what we're looking at right now is the just general agenda that I'm going to run through for the webinar. And again, starting with the coronavirus relief bills and then working my way through to what's happening with the IRS, the states, the ones we normally deal with, which are Virginia, Maryland, and DC. I'll briefly talk about some other states, and then we'll go into the B-10 and some miscellaneous items to run through. So a lot of people, we'll start with the coronavirus relief bill. A lot of people don't really understand, but the coronavirus relief bill has actually come in 3 different phases so far. So the first phase, as you can see here, was for the medical supplies, development of treatments and vaccines. It passed. It went kind of almost straight through the House and the Senate with very little, drawback on it. That was the first phase of the relief. The second phase focused more on providing free testing for Americans throughout the United States. Also kind of putting protections in place for unemployment insurance and paid leave. And as you can see, that one maybe got a little bit more pushback in the House, but it sailed through as well. Phase 3, which I think we're all kind of focused on right now, provides relief for individuals, families, small businesses, hospitals, and distressed sectors of the United States. And as you can see,
can you be sure you share your screen? It doesn't look like
is it not being
able to see it.
You can't see the screen right now?
Mm-hmm.
Okay, let me try again. And okay, can you see it now?
Yes, you're all set.
Okay, great. So the third phase, which is where I'm at right here, basically passed through uncontested. Very little drawback on that one. And what I'm going to focus on for the next couple slides here is the CARES Act. And the first thing that I'm going to focus on is the new provision for standard deduction. So what Congress has basically done is they've said, look, for the 2020 tax return, if you take the standard deduction, we are now going to allow a $300 above the line deduction for charitable contributions that are done in cash. It is unknown if this will apply after 2020, but on the 2020 tax return, which will occur next year, if you donated $300 or more in cash to charities, you can take that as an above the line deduction, which will offset gross income dollar for dollar. For those that are going to itemize, you get even better treatment. Under the Tax Cuts and Jobs Act, we saw that the charitable contribution limit was raised from 50% of AGI to 60% of AGI. That has now been raised for tax year 2020 from 60% to 100% of AGI. So the IRS is really trying to allow folks that want to be charitable, that want to make those charitable contributions, whether you're doing the standard deduction or the itemized deduction, to really get the relief from taxation if you make those charitable contributions. For retirement plans, and this is really focused on individuals that have been diagnosed with COVID-19, or perhaps had a family member or dependent that came down with the virus, or are experiencing adverse financial consequences from furlough or quarantine. So if you're experiencing any of that, you're now eligible to take up to $100,000 from any of your U.S. qualified retirement plans, and you won't be subject to the 10% early withdrawal penalty. You can repay the full amount within 3 years without any ramifications at all. And also it allows you to do the same for loans. So if you want to take a loan up to $100,000, I believe the limit previously was half of the amount in the qualified retirement plan, but now it's up to $100,000. That can also be repaid. So for those individuals that are maybe looking for some lifelines out there, or maybe some padding just to make sure that they can get through the next couple months, this is a great option for folks to consider. There is a fourth phase that is currently kind of being bounced back and forth. It has become a little partisan. They're really talking about a couple different things to really help folks out. They want to really stimulate the economy, and one way to do that is, as the Democrats have proposed, is to repeal the SALT cap deduction. I know that there was a lot of wrangling with this when the Tax Cuts and Jobs Act came out. For most of my clients, though, the SALT cap deduction, I mean, in conjunction with the alternative minimum tax, it was really a shell game. You moved one from the other and didn't really have any real consequences. And if they do really have a problem with the SALT cap deduction, they can just reinstitute the alternative minimum tax, and it should take away any issues they may have with it. So I'm not really sure why they're arguing over it. There has been talk about reducing the medical expense floor, which is on Schedule A. Right now it's 7.5%. It used to be 10%. Now they're thinking 5% or even 0%. So if you did have medical expenses, you would be able to get a full itemized deduction for that, or itemized deduction subject to the 5% floor in 2020. There are talks about more tax rebates. So we'll talk about the stimulus checks that are going to go out here in the next 3 weeks. But they're talking about potentially doing more of those as well. And then one item that I think a lot of people are passionate about is improving infrastructure to rural areas by making sure that we get internet out to a lot of those places that don't have the internet. I know that was a big topic of consideration when the quarantine procedures went into effect in a lot of states. How do we get people to work from home, work remotely as I am right now? And how do we get them hooked up to the internet so that they can continue to do that work? Okay, stimulus payments, which this has been on the tip of everybody's tongue for the last week or so. This was finally approved. It kind of bounced back and forth. I saw numbers go up to as high as $7,500 per check to as low as $300 per check. And here's where they've landed. So, and hopefully this makes sense when I walk you through it. But for each adult, you get $1,200 if you're within the thresholds that are listed in the chart that I put on here. So if I'm an individual with adjusted gross income between $75,000 to $99,000, then I'm going to get $1,200. If I'm an individual that falls within that range, and I've got a child under 17 that I claim, I'm also going to get an additional $500. Okay. If I'm married and my married AGI is between 150 to 198, then each adult gets $1,200. That's $2,400. And again, it's going to be $500 for each child under the age of 17. There's a phase out, once you get over the exceeding lower threshold, so that's the middle column there, it phases out at $5 per every $100 over the lower threshold. So you may not get exactly the $1,200. It may be some amount less than that. But that's kind of how the mathematical formula works with the stimulus payment. And for those wondering, well, what's my AGI? You would just go look at line 8B of your tax return. That's generally where you will find your adjusted gross income, so you can see if you meet these requirements or not. We had a lot of questions come through on who was eligible to receive the stimulus checks and who was not. I've put kind of a side-by-side comparison to show folks who's eligible and who's not eligible. So typically you need to have a social security number to be eligible. It applies generally to US tax residents, so individuals satisfying the substantial presence test, green card holders, US citizens, and it's for any US tax resident that resides anywhere in the world. Folks that are not eligible are going to be those folks that have ITINs or that are non-residents, and that includes G4 visa holders. So G4 visa holders that file the 1040 non-resident return will not be getting a stimulus check. And we will stop right here to do our first poll of the day. Lori, do you want to share that poll? Okay, it looks like the poll is, let's see if I can get this to work. Okay, so it looks like the poll's not going to work. I'm going to go ahead and go on though. Okay, I've had this question also. What do I need to do to get my stimulus payment? There is no action needed by by taxpayers to get their stimulus payment. The way it's going to work, and this is already in process, the IRS is either going to look at your 2019 tax return if you already filed it, or if you haven't filed it, they'll look at your 2018 tax return to make the determination based on the previous chart if you qualify. There's our poll. Let me go ahead and ask the poll question. I'll get back to the stimulus payment. Are individuals with I-10s eligible for a stimulus check? Let's see how many people were paying attention here. Looks like the vast majority of folks were paying attention. Good. Okay, let's stop the voting. The majority of people said no. That's right. That's right. If you have an I-10, you are not eligible for a stimulus check. Okay, getting back to the slide that I was talking about here, how they're going to do the stimulus payments. So again, they're going to use the 2019 tax return if filed. If you haven't filed that and it's still pending, then they're going to go to 2018. What they're looking for is, again, the AGI. They're going to look to put those parameters in place. They're also going to look to see if you have direct deposit banking information provided on one of those two returns. If you do, and it's a US bank account, obviously they're going to then deposit those funds into your account. The 3-week clock has already started, so sometime within the next 3 weeks, folks will start getting these direct deposits. The initial thought was that anyone offshore is going to receive a paper check, which a lot of us have sent comments to the IRS and to Congress, like, hey, that's a really bad idea. There has to be a better way of getting folks offshore this money because it's a tough thing for individuals offshore to cash paper checks in the US to begin with, and now we're making folks do that for these stimulus packages. It's going to be a little bit difficult. There will be a portal that they're saying that they may use if there's no banking info on file, and for those people that they don't really know, there's no banking info and maybe they file 2018 or the last known address is what they're going to use to send the information to. So be aware of the procedures for that. Okay. This was a big hubbub basically yesterday and today. I actually updated this right before the presentation. They were saying that folks that were Social Security recipients, senior citizens, railroad retirees, veterans, people with disabilities, that they were going to need to file a tax return, or individuals that maybe have not filed previously, file a tax return or a simple tax return, if you will, to get their stimulus check. They have now said, look, at least for the Social Security folks, senior citizens, we're just going to go right off of the SSA 1099, which they have on file from Social Security, and if that gets them to qualify, then that's what they're going to use. I'll warn you though that if you don't have a filing requirement, you may have to file a simple. They haven't come out with it yet, but a simple tax return to get your stimulus payment, because otherwise they wouldn't know whether or not you qualify. Okay, so another question I got was, well, what happens if, for example, I had a really good year in 2019, and now due to everything that's happened, my income has dropped substantially. And this is one thing that I think catches a lot of people off guard. There will be a true up for the stimulus payments. So it really doesn't matter if they use 2018 or 2019. It will all come to fruition in 2020 on the 2020 tax return. So what happens is when you file your 2020 tax return, if your income drops significantly, as in my example here, you have someone that was making $200,000, had $200,000 of AGI in 2019, their income drops substantially in 2020. What will happen is that they will be able to receive the eligible amount on their 2020 tax return. So that will true up kind of what they should have gotten from the stimulus payment that they didn't get. A question that I've gotten a lot of recently too is the stimulus payment going to be taxable to me? The answer to that is no, it is not an income item. It's not considered income, but it's also not like a gift. So it's not like the US government is giving gifts to all of its citizens. Basically, the way it works is that it's a credit that is sent as an advance payment with no interest, and it applies towards your 2020 taxes. So again, if you got the stimulus payment, but you shouldn't have got it, then that amount may be adjusted, downward on your 2020 tax return. So just to be clear, there will be a true up on this. So if you're going to get the payment, I get the realities of what's happening right now, but if you're getting the payment and you probably shouldn't have got it, there will be a true up on that on your 2020 tax return. This is another question that I received from a couple folks. It's we have a lot of clients that were, you have a U.S. citizen that is maybe married to a G4 visa holder, or a U.S. citizen that's married to an individual that is not a U.S. person. They just have an ITIN. The answer is that in regards to the stimulus payment, is that they'll treat the U.S. person as a single individual. They'll look at him that way, and then the spouse with the ITIN won't qualify. So in this situation, assuming everything else falls into that matrix that I had a couple slides ago, the U.S. citizen spouse or the U.S. person spouse will get the stimulus payment based off of the single individual rules. Okay, so what's happened if, for example, in 2018, I put a bank account where the bank account is now closed, or I no longer have that bank account for the direct deposit, or perhaps I've moved but I haven't notified the IRS of my new address and I want to make sure I do that? The answer to that is really you need to file your 2019 tax return as soon as possible. The only way the IRS will know, at this point in time, will know about your new address or your new banking information is if you file the 2019 tax return. There's really no other way to get that done. And so if you need to change that to get your stimulus payment, I would do that as soon as possible. Can I call the IRS about my stimulus check? The answer to that, unfortunately, right now is no. If you try to call the IRS, which I have several times over the last couple of weeks, all their call centers are basically closed. They have a couple that are open here and there, but for the most part, they're all closed, and that's due to the coronavirus. A lot of their employees are teleworking or telecommuting, excuse me, and working from home when they can. The IRS is urging folks that have questions about the coronavirus or the stimulus check to use the www.irs.gov coronavirus link there, and you should be able to get the information that you're looking for by using that link. So again, as I mentioned, most if not all the call-in centers are closed. The IRS has basically suspended a lot of their normal activity that's done where you have a person that's actually working on it. The one thing that's open though is the transcript delivery system, so that's still working. For those people that are looking to buy a house though, for example, if you're trying to do an income verification request using the 4506T, that has been suspended, so I'm not really sure how those transactions will be completed without that process. But they do expect to return by the filing deadline, July 15th, 2020. We'll see if that actually holds true. Okay, can I walk into an IRS office and get help? The IRS offices are called Taxpayer Assistance Centers. At the beginning of my career, I did some time in one of these tax to kind of help out with the taxpayer advocate, and they're fantastic places if you know what you're trying to do and what you're trying to accomplish. A lot of times I will urge my clients that are getting ITINs to take their return down to a TAC to have it physically stamped. That's one of the best ways to get the return processed. But right now, these taxpayer assistance centers are closed, so it's going to be very difficult if you needed to get that type of service completed. Okay, moving forward, let's talk about IRS Notice 2020-18. That recently came out, and as we all know, the filing and payment deadlines for the IRS have now been moved to July 15th. That applies to forms 1040, 1040NR, 1041, 1120. So everyone just kind of got moved forward to July 15th. There's nothing special you have to do to get this new filing date. It's just make sure you file by July 15th. If you can't file by July 15th, then you would file your normal extension forms, which would take you to, I believe, October 15th, although I haven't seen any real guidance on what the extension would do. And as indicated, payments have also been extended for the IRS. So the deadline to make payment is normally, for 2019 taxes, is normally April 15th. That has been pushed back to July 15th. For those individuals that may be filed in February or early March that have already paid their taxes, you cannot get your money back once the payments have been made. They're in with the IRS, so you can't get those back. And then for those folks that paid their transition tax or are paying their transition tax for controlled foreign corporations in installments over the 8-year period, The next installment payment was due on April 15th. That has now been pushed back to July 15th as well. And if you'll notice, I give you the frequently asked questions in the slide. I reference which one I'm referring to here. At the end of the presentation, there's a link to all the frequently asked questions that are linked to Notice 2020-18. So if you wanted to further explore the FAQ after the fact, that's where you would go. They do change those regularly, so what I'm saying today may be changed at a later date. So you always have to keep an eye on that. Okay, IRS 2020 estimated tax payments. We had a question about this as well. It was a very astute observation. The individual said, look, I see that the first quarter payment has been extended from April 15th to July 15th, but strangely enough, it looks like the second quarter payment actually occurs before make any logical sense, but that's the way the IRS is going to do it. For those individuals that that I think that that are trying to get their payments in, make sure for the IRS purposes that you get that second quarter payment in by June 15th. It will be due before your first quarter payment. Okay, another frequently asked question. What about contributions to IRAs? Those are normally due. So normally I can make a contribution to my IRA for 2019 if I do it before the filing deadline. So that's April 15th. Well, that has now been pushed to July 15th. So now you have some additional time. If you want to make those voluntary contributions to your IRA, you can do it prior to July 15th. Another question that we've gotten is what happens if I've taken an early distribution in 2019 and owe the 10% additional tax? Well, that's also, the payment of that additional tax is also deferred from April 15th to July 15th. And then last but not least, HSA contributions, just like the IRA contributions, that has also been pushed back from April 15th to July 15th. Okay, what if I'm trying to claim a refund for 2016, 2017, or 2018? So perhaps maybe I figured out I did something incorrect on one of those tax returns. Maybe I overreported income. I'm trying to go back and fix that with the IRS, and I want to make sure that I'm getting in before the claim of refund statute of limitations. Well, for 2017 and 2018, you're probably well within the statute, so I'm not too worried about that. But for those individuals that have an issue with 2016, you want to get that done as quickly as possible. What I normally like to do, and obviously we can't do this with the IRS being closed right now, but I like to call the IRS to ask them what is the RSED date, the refund statute expiration date, so I know what my timeline is to do an amended return for 2016 if I'm trying to claim a refund. Without that information, though, you're going to have to take your best guess based on the facts and circumstances of when you filed your 2016 return to calculate when the refund statute is coming up. So if you think you have these issues, you may want to contact the Wolf Group or your tax professional, work through that analysis and make sure you understand, because you don't want to lose out on a refund if you can get it. Okay, another common question. I've actually gotten this from a lot more attorneys than anybody else. And I think they recognize the importance of this, is the international informational reports. So these are your 5471s for controlled foreign corporations, 8865s for controlled foreign partnerships, 3520s and 3520s for foreign trusts, and so forth. There's no specific relief available for those. So those don't get pushed back to, or at least we don't think they get pushed. It's gray area, right? We don't know. Normally they follow the tax return, but they're specifically not outlined as being exempt under FAQ 10 and pushed back to July 15th. So our internal policy is that for anyone that has one of those forms, we're going to be filing an extension for them on April 15th just to be protective and make sure that we insulate them against late filing penalties, because those are pretty significant. Most of them are $10,000 if you file them late. So you need to be real careful if you have a tax return with those forms in it, and make sure that if you're not going to file before April 15th, that you get an extension in place. Okay, gift tax returns. So this notice 2020-20, was used to augment the 2020-18 notice. A lot of comments came in about gift tax returns and the fact that they were not a part of the extension. So the IRS decided, okay, we'll let the gift tax returns also be extended to July 15th. If you're unable to file the return by July 15th, then you do need to file the extension on Form 8892, which will take you to October 15th. So for those individuals that have gift tax returns, you need to make sure to follow this procedure if that's what you're trying to do. Okay, a big thing, which is something that I've never seen before, but is the brainchild of the new IRS Commissioner, Chuck Rettig. He decided that, look, if we're going to kind of close down the IRS, it's really not fair to force folks that have existing installment agreements or offers in compromise for all that to kind of go defunct. So he rolled out this IRS People First initiative, which basically says, look, if you're under a payment plan with the IRS, we're going to postpone all payments from April 15th to July 15th. So if you had a payment that falls within that date range, it'll be postponed. If you want to enter into a new installment agreement, it's probably going to have to be for an amount less than $25,000. You would do that through irs.gov online. For offers in compromise that are currently pending, so I owe the IRS a lot of money, I can't pay it, so I give them an offer in compromise. They're not going to close any files that are currently pending, and they're going to give an extension to provide all documents until July 15th. Liens, levies, and private debt collection will be suspended throughout the period, and there will be no new audits until after July 15th. Two big things that are still active, though, are the high def program. So if you're making a lot of wages or a lot of income and living inside the United States and not filing your tax return, the high def program, I have an article on this on our website, is still active. They are still looking for those folks. And then for those individuals that owe the IRS $50,000 or more in tax, they're still doing the passport denial program. So be careful with those two. Digital signatures. So the IRS does not like digital signatures. They're only applicable for certain forms. And if you look at the picture on the right-hand side of the slide there, that's I believe that's the 8879 form, in which you can sign electronically. For some things, though, the IRS is now allowing digital signatures, at least temporarily, which you can send in through their quote-unquote secure zip. And you can use the digital signatures to extend the statute of limitations if you're perhaps under an audit, waive a statute of notice of deficiency, sign a closing agreement, perhaps in an offshore voluntary disclosure, or if there's some kind of specific case where your client needs to designate a power of attorney, that can be used with a digital signature. I've tried to do this for some penalty abatement recently and not been successful. So really, it's very limited on what they're allowing. I'm hoping that if the coronavirus quarantine goes longer, that they do allow more digital signatures, especially on things like streamlined filings or multi-year filings that are going backwards, because those involve not only signing physically and manually, but also mailing into the IRS, which I think both are kind of things that we want to try to avoid right now. Okay, so that's it with the IRS. Let's move on to state income taxation. So the states, this is a big deal. When the IRS moves the filing and payment deadlines, it really affects a lot of the states. We have 42 states that basically try to conform to federal tax return deadlines. And all of these states basically operate on a fiscal year that is between March and June. And so what happens is when the IRS moves their deadlines, the states also conform to that movement. But the problem is that if all that revenue gets pushed back to July, you basically have a lot of revenue that should have been accounted for in this last fiscal year that flows through into the next fiscal year. So states have been scrambling because there's a lot of revenue that comes in during these months to figure out, how do we do this? Do we amend the fiscal year? Do we just have a negative balance that rolls over? How can we do this within our state legislature? So it's a lot of things that have caused the states to not react as quickly as the IRS to moving their filing and payment deadlines. So we'll start with the state of Virginia, and we've had this question come through. When is the state of Virginia filing deadline? The deadline is May 1st, 2020, so they did not move their deadline back to July 15th. For anyone that does not file by May 1st, there's an automatic 6-month extension for filing, so be aware of that. What they did do was they allowed folks, so if you have an income tax payment that's due between April 1st to June 1st, you can basically, you don't have to pay it. You can wait till June 1st to pay it. There won't be any penalties with paying it by June 1st, but here's the big thing, interest on that payment is not waived. So you will be assessed interest if you don't make your payments timely. So if you owe the state of Virginia money for 2019, or perhaps for the first estimated tax payment, and you don't pay those timely, there will not be any penalties, but you may be assessed, or you definitely will be assessed interest. So be careful with that with the state of Virginia. Okay, the state of Maryland. Maryland is very close with the IRS in regards to their tax code. So when the IRS extended all of their deadlines, Maryland kind of matched that in step. And so filing, payment, 2020 first quarter estimated tax, all moved to July 15th. And that also includes interest. So just like the IRS, everything kind of gets pushed back to July 15th. District of Columbia. Okay, so DC. So your D40 for those of you that have income tax returns, and the D30, which for a lot of folks, we do that for rental properties. Those are all moved back to July 15th, 2020. They're a little different though on their estimated tax payments. Those remain unchanged. So the first DC estimated tax payment is going to be April 15th. So the three jurisdictions we deal with a lot, DC, Maryland, Virginia, you can see it's a mixed bag. It's a hodgepodge of when these things are due. At the Wolf Group, though, we actively understand this. We've been prioritizing depending on which one of these filing deadlines is coming up to make sure that we get these returns turned around or information presented to the client so that they can meet their obligations. We understand that it's very important, but make sure that you also understand your obligations in regards to both filing, payment, and estimated tax for 2020. Some other common states that we deal with at the Wolf Group, and I don't have them all on here, but we regularly have alerts sent to us. So if you're in a state that's not listed, you can always email us, and we're happy to give you the details for filing and payment. But California, Connecticut, Massachusetts, New Jersey just came out with theirs, New York, all postponed and pushed to July 15th. North Carolina is interesting, just like Virginia. It's not going to allow interest. So while the filing and payments have all been moved back to July 15th, you will be assessed interest if you don't make your payments timely. Okay, and that's it for the states. Here's some more frequently asked questions that we get, but before we go into that, let's go into our second polling question. Okay, what are the new federal filing 2019 tax payment and first quarter 2020 estimated tax payment deadlines? Is it April 15th, May 15th, June 15th, or July 15th? Okay, looks like a lot of folks were paying attention here. Good. Okay, well, let's stop the polling. And July 15th is the correct answer. So thank you for listening to that. That is right on par. Okay, common question we've gotten. This is actually a big deal worldwide. I've seen a lot of articles on this lately because there are a lot of folks that are stuck, if you will. Perhaps they were sick and are no longer sick, or are not sick but forced to stay in a location that is not their home due to a quarantine or a stay-at-home order. I saw, for example, the actor Idris Elba. I believe he's in Los Angeles trying to get back to the United Kingdom. He had the coronavirus. He is now beyond, or I guess, he no longer has it or is beyond that now. And he wants to go back to the United Kingdom, but can't find a flight home. So he's basically quarantined in, I believe, Los Angeles right now. But, the different jurisdictions are trying to address what happens if I get stuck in a certain country or a certain location, and I stay there long enough to satisfy their tax residency tests. The IRS has not come out with anything in specific, but I can tell you that there are two things that you can use to your benefit, and unfortunately, you'd have to file a tax return to do it. But if for some reason you satisfy the substantial presence test, you're a non-US person, you're in the US, your days count in the US, you're not a G4 visa holder, you have less than 182 days in 2020, but you satisfy the substantial presence test because perhaps maybe 2019, 2018, you spent a substantial amount of time in the US and you're stuck in the US because of the quarantine laws, then you can use the closer connection exception, which again, you have to file a tax return to explain that. But you can use that to say, look, I'm not a resident of the United States and I don't need to pay worldwide income tax on my income. For those folks that have more than 182 days, you can also use the treaty tiebreaker rules to your benefit of your home jurisdiction. But you do need to be a resident of that home jurisdiction to use those to your benefit. So just keep that in mind. This is the default rule. I'm sure the IRS will come up with something to help these folks out at some point. Okay, the IRS announced on March 18th, let me go back to it. So March 18th on 2020, that they've noticed that a lot of non-residents have been filing their non-resident returns with rental property, U.S. rental property incorrectly. It's a pretty significant delinquency. About 13 to 15% of returns filed are not done properly. And what's happening in specific here is folks are not claiming what's called the net election. So the way it works is that if I'm a non-resident, let's take the primary example here we see a lot, which is the G4 visa holder. I'm a G4 visa holder. I own U.S. Real property that I rent out. So I have a renter. Basically, I'm a landlord. I'm getting rental income. I report that rental income on my U.S. tax return. The default rule is that I have to pay 30% tax because it's what we call not effectively connected income. So 30% tax on the gross rent, not the net, the gross, okay? The net election, basically what it does is it allows you to take that non-effectively connected income and elect for it to be treated as effectively connected income. And so what this does is it basically allows you to take expenses against that gross rental income and be taxed at progressive tax rates as opposed to the 30%. And what a lot of people have been doing is they've been reporting their rental income as ECI income and getting the benefit of all of that without taking that net election, which you can't do. So the IRS will be looking for those folks this summer. You may get a notice on that if you haven't been doing it correctly. The net election should be taken the first year of your rental. It's only a one-time election, so you don't need to keep doing it. If you haven't done it, though, you may want to consider working with the Wolf Group or someone similar to correct that issue. The other thing they're looking for, which is tied into this, is, again, non-residents that have LLCs that haven't been filing the Form 5472 to report transactions between the non-resident and the U.S. LLC. So another common thing we see is I'm a non-resident, perhaps a G4. I have an LLC that owns rental property that I have that I'm renting out. I'm filing my non-resident return. Maybe I've done my net election correctly. But I have failed to file my U.S. disregarded entity return, which is Form 1120, page 1, and Form 5472 to report the transactions between myself and that LLC. Failure to do that is a $25,000 penalty. It's pretty significant. We've seen a lot of folks get hit with that. So be very careful. They're casting a wide net on these types of activities. Okay, the BE10 survey. We've got a lot of questions on that one. The BE10 is an economic survey that's done by the federal government every 5 years. So it last occurred in 2015. The rules change slightly every 5 years. So we were waiting to get the full kind of write-up as to what was required before we really kind of gave the details on this. This just came out, so we're now able to speak directly with our clients and anyone else that's interested in having us do this form for them, to get it done. But generally, it's going to apply to individuals or businesses that, U.S. individuals or U.S. businesses, and we'll talk about what that means, that have a direct or indirect ownership or at least 10% of voting stock in a foreign corporation, a foreign partnership, a foreign disregarded entity, or rental real estate. And we have a lot of clients at the Wolf Group that are U.S. persons that have rental real estate, so they'll need to do the B10 survey. Penalty for failing to file the survey is your typical $10,000 to $25,000. So be real careful that you make sure that you get this done if you have the requirement. Foreign real estate. So we get this question: what do you mean by foreign real estate? Well, first off, it applies to a wide variety of things. So single units, multi-units, equity REITs. The key here, though, is that it has to be rented out. You have to be getting income from it. It has to be the equivalent of a business, right? So if it's a vacation home or some kind of second home that you don't rent out at all, that's not going to qualify. That's not going to be something that you need to report on. Again, the survey is looking for economic activity. The other thing that you have to note is that and the primary one I want to bring here is the owner that has the primary residence offshore and then leases out that primary residence while maybe perhaps they travel outside of their home country for work. If it's your primary residence and you're leasing it out when you're not there, but then you come back, that's excluded from the survey as well. So Really, this is going to apply to, investment properties or things that, you're renting out that are not going to be your primary residence. Okay, U.S. person, this is another thing that we have to make sure that people understand. You kind of have to throw out all the rules that you know about U.S. person or U.S. residency that are, tax-based. This isn't a tax-based survey. Again, it's an economic survey. So the way it works is that you're a U.S. person if you meet certain requirements. So if you're living inside the United States, you're going to be a U.S. person, okay? If you're living inside the United States, but then you've left to go and reside outside the United States and your stay is less than 1 year, you're still going to be a U.S. person. But if you are a U.S. person and you've left the United States and you've been outside the United States for more than a year, then you're going to be considered for B-10 purposes not a U.S. person. You're going to be considered a resident of whatever jurisdiction that you're currently living in. There are some exceptions to that rule, though. So if you're on assignment for business with an intent to return to the United States, then you still may be a U.S. person. And then for those individuals that are perhaps in the U.S. or outside the U.S., they're government employees, diplomats, consular officials, military, that's going to be an exception as well, too. Okay, so U.S. person, some definitions here. A U.S. person will be someone that is actually a resident inside the United States. Persons can be individuals, branches, partnerships, associated groups, associations, estates, trusts, or corporations. A trust, whether foreign or domestic, is not considered a business enterprise, and the beneficiaries of the trust are considered the owners. So they may be the ones that need to report the BE-10 form. The different types of there are several different types of BE-10 forms. So for a lot of my clients, we're seeing that they have to do the BE-10A and the BE-10D. Those are the most common ones. So pretty much everyone files the BE-10A. The BE-10B is going to be for your mega companies. The BE-10C is going to be for the pretty much mid-sized companies. And then the BE-10D is going to be for your small businesses, rental properties, things like that. So those are the different BE forms that apply to the BE-10 filing. Okay, last but not least, and then I'll take some questions here. These are some helpful links that I've kind of put on here. There's a lot of information floating around on the coronavirus relief package, the IRS notices that are coming out. The states of Virginia, Maryland, and District of Columbia have these special pages set up about the coronavirus so that you can kind of track the changes as they come through. For people that have small businesses, that there's a lot of, I didn't really talk about that with the CARES Act, the employee retention credit, and the things that are available for businesses. That's a whole presentation in itself, I think. But for a lot of that relief, the IRS has pages for that. I can tell you though that I was on a webinar yesterday for KPMG, and I know that the small to mid-sized businesses, the mid-sized to large businesses have all this wrapped up in a nice little bow. They know exactly what they need to do to get the money from the government for their relief. They're ready and to be activated and work on that as early as possible. And I think that my concern is that small businesses and self-employed individuals that are also, they can also get some of this relief, may not really understand what to do, how to do it, or when to do it to be able to access the funds that are required. And so I'm hoping that we see some folks that really step up to get some of that information out there to make people understand exactly what they need to do to access those funds. So hopefully these links will be helpful to you, and they will be something that you can use to your benefit. Okay, let's take some Q&A questions here. So the first one I have here is, does the standard deduction apply to G4 visa holders? The answer is no. A G4 visa holder, well, the answer is generally no. A G4 visa holder that does have to file a 1040 non-resident tax return can only itemize. They cannot take the standard deduction. Now, if a G4 visa holder makes a 6013G election to file jointly with a U.S. tax person, then they might be able to get the standard deduction. But generally speaking, non-residents do not get the standard deduction, only itemized. Okay. For stimulus cash, on what is the basis for adjusted gross income on the 2018 tax return, since many like me have yet to file the 2019? I'm thinking, again, this goes back to my comment that the IRS can only use what information they have available. So if they don't have the 2019 tax return, the only thing that they will have is 2018. And so that's what they're going to look at. There may be a true up when you file your 2019 return. Maybe they sent you a smaller amount of money than you should have gotten. They may adjust that. But there will definitely be a true up when you file your 2020 return. Let's see, is it really AGI or MAGI, the MAGI? So this is a great question. This is unknown. I'm not 100% certain. So the question relates to when you look at AGI for people that are offshore, a lot of these folks are taking the foreign earned income exclusion, which if you look at their adjusted gross income, it could be significantly low. And typically for folks offshore that do that, what the IRS typically looks at is the modified adjusted gross income, which will then do some backing out to make sure you get to the right number. I would bet that they'll probably end up looking at the modified adjusted gross income, but the way the language is written, it says AGI. As usual for Congress, they don't really consider the offshore folks very much when they write these things. Is the stimulus check a single payment? I believe it is. I believe what will happen is that there will be a one-time calculation, and for a lot of people, they'll wake up in the morning, they'll check their bank account online, and magically it'll be $1,200 or $1,700 or $2,900 or whatever it comes out to be. You'll just see something pop in there that's a direct deposit from the Treasury Department. So, stimulus payment, college student who's never filed in G4 parent, do they need to claim the payment? I'm not really sure what that means. But again, the G4s don't get the stimulus payment, and I'd have to know more about the college student to understand if they qualify for the payment or not. U.S. green card children of G4 parents get the stimulus payment. That's a tough one. I don't think that they do because I think that the G4 parents have to qualify first, and then from there, the children, the $500 for each child comes in because I don't think they're qualifying children. But that's a good question. Does my adult child who is attending college receive stimulus money? Well, if your adult child's been filing a tax return, then they could, if they're, if they meet the qualifications, they definitely could receive it. This is a good one. So folks offshore will also get direct deposit if they have a U.S. bank account. That's very true, and that's a good caveat. That's good to point out that again, the IRS is looking to make this super easy. They don't want to be sending out a lot of checks. So if you are living offshore but you still have that U.S. bank account, then likely you would get that direct deposit into your U.S. bank account. Is there a cutoff date as to whether they will use the 2019 or 2018 and 2019 tax return? We don't know, and that's something that is almost impossible for us to check now because there's no one to call. There's no one that's going to answer that, and I don't think that they'd probably tell you when they're doing all this work. But I assume what's happening is that they're already looking into it, making these determinations. So there's no specific cutoff date that I'm aware of. Okay, let's see. Can a G4 visa holder filing a 1040 NR pay the extended deadline? Basically, I think what the question is asking is if I'm a G4 visa holder and I'm filing the 1040 non-resident return, do I get the July 15th deadline? And the answer to that is you do. To file an extension for Form 8938, what form do we use? Do we use the same form for filing the 1040 extension? Well, what you want to do is you want to extend your 1040. That's really what it comes down to. So if you have the 3520, the 5471, the 8938, just to be conservative, what I would recommend is you file the 4868, which is the extension for Form 1040. Extend your 1040 tax return and do it before April 15th, and then that should cover all of the other international informational reports that go with the 1040. I would note, though, that the Form 3520A was due on March 15th. That one was not changed. So hopefully if you had that filing, you got your extension in, which is the 7004 extension. You got that in for that form before March 15th. Does anyone have to file the FBAR? Does one have to file the FBAR for foreign bank accounts? Yes, the FBAR is still active. You still need to file it. There is an automatic extension on that one to October 15th. And that changed a couple years ago. If a U.S. citizen resides abroad, is there any exemption from the BE10 survey? The answer to that is yes, but you have to be abroad for more than a year. So again, let's just say that I'm abroad, I'm in the United Kingdom, I've been living there for 10 years. According to the BE10 rules, I'm a resident of the United Kingdom. Again, that's BE10 land, that's not U.S. tax land. And so therefore, I would not have to file a BE10 survey. The BE10 survey, just to understand, is tracking investment in the U.S. for things that are outside of the U.S. So it really wants to know, what do folks inside the United States hold for assets outside of the United States? Should a G5 visa holder file 1040 or 1040 NR? Are they available for stimulus cash? I will have to actually look into that, and I'd appreciate the person that asked that to get back to me on that one, because the G5 visa holder is a very special filing, and we'll definitely come back to that one. Due to the travel restrictions during the COVID-19 contagion, will the physical presence requirement be waived or relaxed for those that avail of the foreign earned income exclusion? So I think that this question is a fantastic question. It's the reverse of the slides I put up for those people that were stuck inside the United States for the substantial presence test. As of right now, there is no update on the physical presence test, the PPT, the 330 days. But I would assume that the IRS will come out with some kind of carve out that would allow people to still access the in the 330 days if they were quarantined in a place that's offshore or quarantined in the United States, for example. Okay, I have a property in my country, I'm assuming not the United States, with my 4 other siblings. I don't receive any income from it. Do I have to report it when I file my income taxes? Also, do I have to report the property in the form BE10, and how to report the property that is owned by 5 individuals, some U.S. citizens and some not? Well, if the property is not generating income, then technically it's not a business enterprise. So there would be no BE10 reporting on that one. Also, if it's not generating income, then it's not a rental property, then you don't have to report it on the Schedule E Part 1. In some cases, though, some countries, they have the requirement that the only way for a non-resident to own property is to own it through a business entity. So we see this a lot with Costa Rica, Turks and Caicos, some of the island countries. In that regard, then you may be required to file, the 5471 or the 8865 or the 8858 forms. You may also be required to file the Form 8938 to report that as well. Does the new Wolf Group website have a workbook so we can begin? So I think the question is asking, can I access the tax organizer from the Wolf Group website? Happy to follow up with the individual that asked that. I believe we do have that information on there. Okay, so this is a good one. I file the Form 8938 every year to disclose my IADB pension. Do I have to file the BE10 form for my pension? So pensions are not a reportable asset on the BE10 form. Again, it's only a business enterprise that's generating activity. So foreign corporation, foreign partnership, rental properties, something like that, something that's generating income offshore. The pensions are basically a passive asset that does not need to be reported on the BE10 form. Is the increase in AGI-related limit for charity deductions only applicable to cash gifts? I believe the answer to that is no. I think that's only, the cash gifts I believe are only for the above the line deduction for those that do the standard deduction. I believe that, the threshold from 60 to 100% follows the normal charitable deduction rules. Please provide a summary of the new rules for Form 3520. So that is in reference to the new RevProc 2020-17. We're going to be doing, I will do a webinar just on that one. And I'm also going to do a significant blog post slash article on that as well. And just so keep an eye out for that. That's a whole separate thing that I think, would take a long time for me to cover because there's a lot of moving parts to that new RevProc 2020-17 in regards to tax favored foreign pensions and tax favored foreign savings plans. I can tell you, though, that the one big thing that we're waiting on to really provide some good substance is that the IRS has proposed that, or told us that they're going to issue proposed regulations. I have a ton of questions on that RevProc that I have sent over, and I'm waiting for them to get back to me on those. I'm also waiting on the, those proposed regulations before we really get out there. Okay, just got a note here from Lori Pullman. She says the organizer is not on the website and that our support team will send. If you want the organizer, our support team will send it to you. So there we go, the answer to that question. Is it possible to initiate an offer and compromise at this time? If so, can it be done in writing since the phone system is down? And Lori's asked me to remind everybody that you can request those types of things through info@thewolfgroup.com. Okay, so is it possible to initiate an offer and compromise? The answer is yes. So for example, if I'm doing an offer compromise, full doc installment agreement, streamlined filing, those are all things that can be, and I tell people, now's a great time to work on that kind of stuff because when the IRS is back up, you want to kind of be the first in line for them to look at those things. You don't want to be, really, later on in the queue. The earlier you can get the queue with them, they're going to have a significant backlog once they get back up. I believe it was last year they were closed for a month, and we saw that put them behind by almost a year. I can only imagine if you add multiple months to that, how far behind they'll be on a lot of these things. So if you are trying to do an offer and compromise, you should definitely either work yourself or have a tax firm do that 656 form and make sure you get all your substantiating documents and get that down to the IRS. It won't be initiated per se, but it'll at least get in the system and get you started when they get back up and running. Okay. Yeah, so the question, we have another question here about the 8938, and it says on the instructions, it would file the due date of the tax return. So it would seem that the July 15th date would apply. That's true. Again, as I said, it's a gray area. We're uncertain. But what we do know is that frequently asked questions specifically says that the July 15th extension date does not apply to information returns. Form 8938 is an information return. Form 5471 is an information return. Form 8865 is an information return. Form 3520 is an information return. So I guess the reason for our comment is, if you assume that it does apply, then you're taking a big risk in our opinion. And we would tell folks to file the extension just to be safe. Likely it will apply, hopefully it will apply, but I would be safe and just file the extension if you have one of those forms. Did you say it's not advisable to mail a tax return right now? Well, I think this is more of a reality thing. I would hate to have my client go to a post office right now with the coronavirus and stand in line around a bunch of other people just to file a tax return. I'm hoping they find ways to make it easier to have tax returns that need to be paper filed or submissions that need to be paper filed sent in electronically. I definitely think the IRS has the ability to do that, and hopefully they'll open it up for more people. Okay, I report my World Bank pension on Form 8938. Do I need to file that on Form 3520 as well? The answer is no. The World Bank pension is Internal Revenue Code 401A. It's a qualified pension, and it only needs to be reported on the 8938. It does not need to be reported on the FBAR, and it is not a foreign grantor trust for U.S. tax purposes, so it does not go on the forms 3520 or 3528. Just the Form 8938, and just in certain circumstances. I joined late. Is the lecture recorded? And as I indicated at the very beginning, everything will be recorded and will be disseminated for any individuals that have any questions or want to look at it again. Clarification, 2020 meaning the 2020 federal return is filed in 2021. That's right. So right now we're working on the 2019 return here in 2020, and next year we'll be working on the 2020 return in 2021. Do we get PDF materials for today's webinar? You absolutely will. As soon as I'm done, I'm going to send my slides over to Lori, and Lori will create a PDF, and that will go out in the next day or two to everybody that attended. Any special advice for delinquent tax returns? Yeah, I would work on those now. I would get those, if you have delinquent, whether it's an amnesty program that you're trying to get into, or you just want to, you have returns that you didn't file, now's the time. The IRS is they're closed down. They're not looking to do a lot of this stuff unless maybe you're on the high def radar. Get those things done, get them turned in, get ahead of the game. I would take this time to really, just like a lot of other things in life, I would take this time to get ahead, whether it's wealth planning, delinquent tax returns, whatever it is. If you've got the time to do it, definitely you should do it. Okay, does one need to file the Form 4868 because of Form 8938 not being filed on 4/15/2020 for 2019? Yeah, again, this goes back to my original comment. The 4868 extension is just a conservative position for those international forms. So my advice to a lot of folks is just to be safe, file that extension if you have those international reports, and do it before 4/15. It doesn't hurt anything. It's just an additional filing to get done. For anyone that's going to be it for now. We're running up on the hour here. For anyone that has any additional questions that maybe weren't answered, I'm happy to take those via email after the fact. And definitely keep an eye out for some of our upcoming webinars that we have. Again, I mentioned that I'm going to do one on foreign pensions and RevProc 2020-17. I'm also planning to do one on U.S. expatriation issues. So we have the new program, Relief for Former Citizens. That's a new amnesty program. I'm going to be talking about green card holders that maybe have exit tax issues as well. We've seen a lot of questions on that lately. Those will be two of the next big ones that we do. And we also may be working on getting out a webinar on perhaps coordinating with some other firms to do a webinar after the employee retention, employee retention credit and how some of these things are going to be working for businesses. I appreciate the attendance, and I hope everyone has a great day. We'll talk to you later.